What if I told you there's an easy strategy that you can start using today that I use and it makes me $10,000 per week? As a matter of fact, the more complex your strategy is, the more complex anything is in life, the more likely you are to screw it up. And the more likely you are in trading to lose money. That's why I've made this as simple as you could possibly get. I have a lot of traders that follow me that are making thousands of dollars per week using this simple strategy. And it's not just a one-off. It's week after week after week. Now, before I get rolling, I want to give you a quick heads up. This is not a get-rich-quick scheme. That is not what this is about. This is a simple process that you can sustain over a long period of time. I want you to copy me, but I don't want you to copy my trades. I want you to copy the process that I've put in place so that you can go and do this on your own, and it's a skill that you will have for the rest of your life. Now, I want to bring you over to my chart, and this is a daily chart or a swing trading chart. Now, what is swing trading? Swing trading is a method that you can use to trade between 1 and 5 days. Can it go 10 days? Absolutely, it can go 10 days. Can it go 3 days, 4 days, 7 days? Yes, it can. Could you go 2 weeks in a swing trade? Yes, but generally, you're going to be in a swing trade between 1 and 5 days. Why is that? Because our daily stochastic down here, our daily trend, moves relatively quickly. It adjusts day to day versus our long-term stochastic. So this is all relative. Let me pull up a long-term chart, and you can see here. These candles are exactly the same. Each one of these is one single day. Each one of these is one single day. They are exactly the same right to left. What do you notice the difference is? Besides having the volume here, you notice that this trend is just not really doing anything. It's just going sideways. This trend is kind of all over the place because this is tracking the week-to-week trend. This is tracking the day-to-day trend. Therefore, you can get in trades and out of trades more quickly over here. Now, you might ask, well, how do the two work together? They don't necessarily have to work together. They can give clues to each other, but you can go long on one chart and short on the other chart. You can go long on the same chart. They do not have to work together. I often get people saying, well, how can you go short, meaning betting against the stock over on the daily chart, but you're long over on this chart, or you think that the stock is a long? Well, because they're independent of each other. If we look at this, we can say this has been going on since May. It has been since May that we have not gone short on a long-term weekly chart on Best Buy. But if we come over here on the daily chart, look how many opportunities we had to go short. Look how many times the trend was pointing down, down, 1, 2, 3, 4, 5, 6, 7 times, and currently, that we could have gone short on Best Buy while never going short on the long-term chart. So they don't necessarily need to work together. Now that we understand that, let's talk about let's talk about a couple of things on this chart first. So if we look, we can define what we have here. We have our candles, which we already talked about. Each candle is a one-day chart, is a one-candle chart. So this is today, this is Tuesday, this is Monday, this is Friday, this is Thursday, etc., going all the way back. Those are pretty easy to understand. Now, what do we have down here? This is our volume. Volume is like a gasoline that goes in your car. The more gas you have, the further you're going to be able to go. The more gas you have, the faster you're going to be able to go without having to worry about running out of gas, running out of steam. So this is how many shares are traded per day. If it's green, that means that there were more buyers than sellers that day. If it's red, there were more sellers than buyers that day. Then we come down to our trend, which you've heard me mention a couple of times. The trend tells you the direction that the volume is going. So if you have a bunch of people that are buying the stock, what's going to happen? Well, the stock price is going to go up. This trend gives you that indication of which way the volume is going and over that period of time, over day to day to day. Now, on the other chart, it's week to week to week. So we can see here with Best Buy right now that we have candles that are pointing in the down direction. We have more selling volume over the last 3 days than buying volume. And we have a trend which is pointing in the down direction. All of this leads me to believe that we should short this stock. Now, when do we end up shorting this thing? Well, I have a pretty rule that I will not break. I need to be trading after 10:06 in the morning. Stock market opens at 9:30 a.m. Eastern time. I wait about 35, 36 minutes. Why? Because of all the overnight trading, all the options trading. People that are in there executing orders before the market opens, all the minutia that happens during the first 30 minutes of the market. If you go and look at the first 30 minutes of the market, you're generally going to see a stock price go up and down and up and down, and it's not going to know what it's doing. And you might say, why is there so much chaos? It's because all the overnight trades are settling. It's because all the options trades are settling. Once it takes about 30 to 35 minutes for all of that to chill out, and then you can go and look at your trade. So we have to make sure it's after 10:06. Now, when I'm looking at something like this, candles are very important. The shape of the candle. You notice here, we have a candle here with this very long wick on top. That means that there was uncertainty that day. You have a stock price that opened right here, went up a touch, but what did it do after that? It pulled right back down, and then it filled out the day and closed the day right here. Now, if you have a candle that looks like this one, this green one in here, stock price opened the day here, went up, pulled back, went down, pulled back, kind of closed the day right in the middle. We look for what are called engulfing candlesticks, candles that have thick bodies on them without the wicks, and they're taking out the previous candle. So if we draw a candle here, okay, there's a good candle. Now the following day you get something that goes like this. It's larger and it takes out the high of the previous day, the high of the wick. In the opposite direction, you have a candle that goes like this, takes out the low of the previous day going in the down direction. When you're looking at shorting, I should explain this. Shorting is just the opposite of going long. All you do is take the chart and flip it upside down. So instead of looking for buying volume, you're looking for selling volume. Instead of looking for a trend that goes in this direction, you're looking for a trend that goes in this direction. Instead of looking for an engulfing candlestick that goes this way and it's green, you're looking for a candle that goes this way and it's red. You're literally taking the chart and flipping it over, and that's exactly what it is. If you think about it that simplistically, you are going to do very well. Don't get into the minutia of saying, oh, I can lose infinite money. Yes, of course you can lose infinite money, but if you have stops in place, which you're going to have if you follow my process, you're going to do well. Theoretically, can you lose infinite money? 100%. There's no arguing that, but you're not going to do that if you follow the process. So we talk about these things that you need to check off. One more thing that we need to check off before I show you how to execute this trade is the difference between the bid and the ask. This is something that 95% of traders don't understand. I often hear people say, every time I buy a stock, the stock price goes down on me. Or every time I sell short, the stock price goes up. Why does that happen? Because you're not paying attention to the bid and the ask. And if you actually pay attention to the bid-ask spread in the first 30 minutes of the market, you're going to notice it's pretty crazy. So right now with Best Buy, we're looking at something that's 3 to 5 cents. That's pretty much fine. I like to see something between 1 and 2 cents. But what does that mean? Well, you can see here the buy and the sell, or the bid and the ask. Remember, this is a market. You have a buyer and a seller. The buyer always wants to pay as little as possible. The seller wants to make as much as possible. So if there's a giant discrepancy, let's say that for this, the seller wants to sell this for $75 a share, and the buyer wants to buy it for $74 a share. Well, there's a $1 spread in the middle. So what's going to happen if you go and pay $1 or $74 for this thing? Well, the market maker is going to make $1 spread on it. So he's going to make a dollar off of you. And what is he going to do to that stock price because he found the sucker in the room to pay $1 more than everybody else wants to pay for it? He's going to drop that price down to probably $74.50. What's that going to do for the other buyers in the market? They're going to be like, oh, well, that's a deal. I'm getting it 50 cents cheaper than I was a minute or two ago. There, I'm going to start buying it. And you, the sucker in the room who doesn't understand bid and ask, is saying, I don't understand why every time I make a purchase, it drops instantly 50 cents. That's the reason. The bid-ask spread is so important. Understanding market makers and their jobs is very important. So for me, I always like to come in here and say, I like to see 1 or 2 cents. That you're always going to have a spread. It's never going to be neutral. 1 to 2 cents is a good number. Now, if we're looking at something like Best Buy that's about $75 a share, maybe 3 or 4 cents is fine. If you're looking at something that's $200, $300 a share, you could probably run it up to 10, 15 cents a share. That's okay. It's all relative. But you want to if you see something like this and you're starting to creep into 6 cents a share, do not do something like that. They are going to drop the price on you as soon as you make the purchase. Or if you sell short, they're going to run it up on you. So that's these things on a checklist. Seeing what type of candle is there, what kind of volume is there, what kind of trend is there, where the moving averages are, where the bid-ask spread is. These are all very important things that you need to go over. So let's see what we would have to do to execute a trade here. Well, I just mentioned moving average. Moving average is the average price over a certain time frame. This purple line happens to be over the last 25 market days. This yellow line over the last 50 market days. Turquoise, 100 market days, 200 market days on the white line. This just gives you the average price of the stock over those last X number of days. Why does that matter? Well, it matters because it creates levels of support and resistance. Right now, we're creating levels of support at the 25-day moving average, meaning that the stock price is coming down, but it's kind of sitting on that 25. I like making trades when the stock price is not attached to the moving average. So if we look at this, you can see we opened the day here above the 25, but we ran through it. So the 25 is actually cutting right through the middle of our candle. I don't like making a trade that day. Why? Because I bet you by the end of today, with how bad this volume is, you come back and check this. You are going to see that the price ran a little back and you're going to end up with a wick here at the end of the day on the bottom of this thing. And the price is probably going to close right around 74.33. Come and check that out and see if it actually happened. What I like to see is a candle that comes down like this and is completely separated. I'm going to draw in, this is the purple line. I'm drawing it. It's a yellow dot extension. I'm drawing in the candle that is completely separated from the 25-day moving average. Then it will have room to run down to this yellow line, which is the 50-day moving average. This is the idea of swing trading. You want to be able to, we know where this trade is going to end. We know this trade is going to end here at support. Just like this plays a level of support, this is going to play a level of support. And if somehow the stock price gets through here, it's 100% going to stop at the 100-day moving average, and it's not going to go any lower right away. It could go lower, but it's not going to go lower right away. They play levels of support, so you know where the trade is going to end. So if I get something like this tomorrow, I'm going to say, great. And then I'm going to see if I can get this on, I don't know, Thursday or Friday. Stops there, take my profit, move on. I'm a happy camper. All because the trend was telling me, go for it. The volume was telling me, go for it. And I knew where to exit the trade. It's as simple as that. Now, you may be a beginner and you may have a small brokerage account and you want to grow this into a larger brokerage account. We all started at the same place. Join the Patreon community. I have everything that you need to get started. I have a Trading 101 series. I have the checklist that I talked about. I have numerous other pieces of material that are really going to benefit you in conquering or starting this process of trading. And not only that, you have a great community of people that are there. It is a lonely road out there to do it by yourself. It's a fantastic place to be, especially getting all of these materials. Now, this video was just one example of how you bring a swing trade together. Click this video right here. Go check out another example. Repetition is the key to everything in trading. Enjoy it.